Well, price target hikes are pretty common on Wall Street, but today there were a couple that caught our attention. Wells Fargo and Morgan Stanley increased their target on the paint company Sherwin-Williams to $650 a share. Now, there are only a handful of companies that trade at that high of a dollar amount, which got us thinking, why do companies choose to keep their stock prices so high? We decided to examine the phenomenon in a segment that we are calling Surprising Stocks. And joining us to talk about all this is Art Hogan. He is the Chief Market Strategist at National Securities. Good to see you, Art.
Nice to see you, too. Thanks so much for having me.
Sherwin-Williams was a surprise for me with the price that it's trading at. But if you broaden it out, why would a company choose to keep its price that high instead of splitting it?
Yeah, it's such a great question. So on the company side, there's three kind of fundamental reasons why they like to keep it there. There's a prestige thing, and all of a sudden, sort of post the 1999-2000 timeframe when everything fell apart, the higher stock price, it just seemed like you were a fancier and better company, and that's been pretty persistent. So we've seen that. And the second thing is large institutional investors pay by the share, so they put a lot of pressure on companies not to actually split their share price, so they don't have to pay as much in transacting and investing in companies. And then the third thing is, remember both in 1999, 2000, and then 2008, when stock prices came down precipitously, if you started at a lower level and you slipped below $10, it became a very slippery slope for your stock to get down to a level that you might get delisted, or your stock price might be too low that you couldn't trade on some exchanges, or you couldn't be in some fund. So I think that's probably the three main drivers for corporations.
So for that last one that you mentioned, it could be a defensive strategy in case if the CFO or the CEO thinks that perhaps the economy is slowing down or we're headed for a recession or something along those lines.
Yeah, that's generally the thought process. There's that sort of prestige thing. I've got a $1,000 stock or a $500 stock. There's that pressure you get from large institutional investors say, hey, listen, we're paying by the share, so we don't care how expensive your stock is. And the third thing is, hey, remember what happened in 2008 when we got down to $5 and half the funds in the world couldn't invest in us because our stock price was too low. So it's those types of things. They're really, those are the fundamentals, but I don't think those are great reasons.
But on the other side, one of the reasons that you might want to split your stock, I would think that you broaden out your shareholder base.
Oh, absolutely. So human psychology, for whatever reason, it's just easier for me to contemplate that a $20 stock is going to go to 40. And I think I'm buying more of it if I'm buying it at 20, even though I'm spending $10,000, than if I pay $200 a share and it goes to $400. The contemplation of going from 20 to 40 is easier for me to grasp as an investor than it is to think a stock can go from 200 to 400. And even though I invested $10,000 in that stock at either stock price and the percentage gain is exactly the same, I just believe it's easier for it to happen from 20 to 40.
Right.
I believe I can buy more of it. It's just it's a human nature thing. And you get more investors that say, I can afford to buy this stock because it's $20. I can't afford to buy this stock because it's $400.
Right. What about liquidity, though, overall in the stock?
Yeah. The more shares you have outstanding, the more likely your shares are going to trade an awful lot. And I think that helps in that liquidity. So if you're a holder, you're probably going to be able to get in and out without moving a stock around that much when there's more liquidity, when there's more volume in your stock. So I think there's a whole lot of benefits. The largest of those are psychological for lower price stocks.
On that note, Art, thanks so much. Art Hogan
My pleasure.
with National Securities.